Hello, everyone. My name is Lourdes Mansour. I'm COO for Habitos, who are CPAs and tax advisors here in Coral Gables, Florida. I'm here with our managing partner, Ray Levy. Ray is very well known CPA with extensive experience in the international tax arena, as well as a CVA or Certified Valuator and a CFF or Certified Financial Forensics Advisor. Ray Levy was recognized among the top 250 South Florida's power leaders by the South Florida Business Journal this past year in 2020. Hi Ray, we are in January, and usually at this time of year, we see a great number of people from the northern states come down to visit Florida, escaping the cold temperatures. This winter becomes always our real estate rental high season. We also know that many Latin American clients who own properties in Florida are not able to come down because of COVID. So these factors are really driving many clients to consider renting their properties while vacant. To analyze the possibility, one question comes up to their mind. If I'm not a tax resident, do I have to pay taxes on the rental income I collect in the US? And what taxes do I pay if I rent my property in Florida? This is our topic for today, renting your property in the United States. So Ray, do they really have to pay taxes? Do we have to pay taxes if we rent our properties out?
So first of all, thank you for inviting me into this podcast. I want to welcome everybody. Of course, we're getting approximately thousands and thousands of people moving to South Florida every day because of the COVID, and some of them are moving permanently. So one of the basic fundamental areas of crackdown that the IRS is really coming down on, and they made several announcements, and one of them being a campaign that they have gone after not only for people that are foreigners, but also domestic people that are renting their properties. And the basic premise is they know that foreigners are renting property here and not reporting their income. And for the most part, they realize that, and they're utilizing, like for instance, property management company to make the payment to them offshore. And then the property management company, in essence, becomes very liable for the withholding, because most of the time when you pay a foreigner, the landlord, in essence, is a foreigner, and the lessor is a foreigner. So the lessee has to withhold 30% from the payment. So saying that, the IRS knows that they're not reporting their adequate withholding as well as their income taxes. So the burden not only shifts from the foreigner, but also shifts from the person that rents from the foreigner.
Wow. Now, I believe our listeners will love to hear about any options available to reduce that tax, and how do you go about it?
I think there is a fundamental error that exists out there, and one of them being, if you have your property that you put it up for rental, you can in fact make an election as a foreigner to deduct all expenses associated with that property, meaning the homeowners association, any repairs, any insurance, any real estate taxes, any expense that is directly related to the maintenance and preservation of your asset. So in saying that, if you make that election, you will be able to deduct. Fundamentally, if you do that election, you really are not going to owe any taxes, because your depreciation will almost wipe out your entire profit. So with that simple election, they could comply with the laws, they could record all of their expenses, comply with ultimately when they sell it, and they will be able to effectively comply with US tax rules. If they don't do that, the irony is that there's court cases out there that says if you don't do this election, you actually lose all of these expenses to maintain your assets. So the day that you sell it, you will pay an enormous amount of taxes because you did not properly make this election.
So you're telling me that basically by using this election, I should be able to get most of that income reduced with between the expenses that I have and depreciation for my property.
Yes.
It's a combination of those things that get you all reduced to not having to have any tax liability.
Correct. That's correct. And actually there's been and this is assuming that you bought a property as an investor. if there's a lot of foreigners that have in South Florida a home that they use as a second home, and they've titled that under a corporation, whether it be a domestic corporation or foreign corporation. And a recent court case actually said that not only you would lose if you don't make this election to properly deduct your expenses, but if you haven't been paying market rent, that they will impute the market rent as if you were in fact subject to reporting that income. And that's an interesting matter, because the law has not settled on that, but there is an indication that the IRS says if you're holding a piece of property under a foreign corporate structure or a domestic U.S. structure, you should in fact impute rent.
Now, we're talking about federal taxes, correctly? Do clients need to pay any income tax on a state level?
You know, we do clients nationwide, and every state has a state income tax. If you are renting a property, let's say, and it's titled under your personal name, which it's one of the basic errors that most foreigners do, is they title the property under their personal name. In Florida, for instance, there is no state income tax. However, if you go to New York, LA, any part of different states, every state has its individual state income tax. So you would be subject to a state income tax. Now, most foreigners says, well, how do they know that I'm really even renting? States are becoming extremely creative in knowing that. One of the basic fundamental areas that they look at is your utility bill. So they'll say, give me your utility bill for the last 3 years. They see a usage. And so you'll say, I wasn't there. And they'll say, yes, you were, because someone was using it. And if it wasn't you, it was somebody else. Mm-hmm. So it's an interesting way. New York actually has used that. California, Ohio has used that. So different states are getting very, very proactive in going after people like that. And again, this is assuming you've bought, in that scenario, whether you've bought the property as an investor or whether you've bought the property as an individual, you may have state income taxes on both sides.
Now, so if I bought it as a corporation, do I still have that state income tax?
You do.
You do? So it's both. If I have it under my personal, I don't. But if I have it as a corporation, then that's when the state income tax might play a part.
That's correct.
Now, I hear sales tax and I get a little scared. What about sales tax? Besides income tax, do clients need to worry about paying any sales tax?
Most states, because of the deficits that are taking place and because of the effects of COVID, are beginning to realize that their residence is a gold mine for sales tax. Several years ago, we had the Supreme Court case on the Wayfair, where before, if you had a product being sold on the internet and it was sold in Florida or it was sold in another state, you really didn't have to deal with sales and use taxes in those states. That whole case shattered the entire industry that was not collecting sales tax. And that was a thrust that was really moved a lot by Amazon, because Amazon was collecting sales tax. Now in the era of real estate, the phenomena takes place with Airbnb. So Airbnb is a platform like anybody else, and people place their homes, their efficiencies, their hotels, their apartment buildings in different components. So you may have an apartment building with 40 units that you have 30 units that are being used residential, but you put the other 10 units in Airbnb and you rent it. Well, if you have a unit that you're placing in what we call transient. So a transient is a short-term use by an individual. In the state of Florida in particular, and I'm talking about the state of Florida, if you don't have a lease greater than 6 months, anything less than that is considered transient. So what bucket do you fall in? Well, then you fall into the bucket of a basic hotel, where you may have a bed tax and you may have a sales tax. And the reason being is, when you have that, the state is saying, look, I'm going to treat you in the same foot as everybody else does. And I think you'll see that with all of the major hotels that are pressing the state, because they're losing traffic into their individual hotels by people putting their individual units on Airbnb. So to do that, the state is now cracking down tremendously on the Airbnb. So what I foresee down the road, similar to what the Department of Justice did with UBS, that they said a John Doe summons, and they did that with credit card processors to find out who the violators are, or they've done that with Coinbase for Bitcoin. So they did that. What they're going to do is sooner or later they're going to go after Airbnb. Airbnb is already reporting. They're going to say, tell me every single person that you've rented in the state of Florida that's gone through your platform, and that is how we're going to tax you that way. So I think it's an evolution that's going to take place, and ultimately, at least every state's going to prevail.
What's the rate for sales tax for something like this in the state of Florida?
The state of Florida is 6%.
6%. Now,
but again, now let's think about this. Wait, so we understand. If I'm in Miami Beach, and Miami Beach says you're a transient place, I have now potentially a Miami Beach tax city on top of the sales tax.
I see. Now, if I'm renting in Miami Beach, let's say, so I'm going to pass these tax costs to the person who's leasing from me, right? In other words, I pass on that in addition to what I'm charging them rent, and then just give that to the government. Is that correct? It's not going to come off my profit, right?
You're basically an agent on collecting on behalf of the state of Florida. However, if you don't, you're still liable for it. And it's similar to any type of withholding agent, that even if you sell the property, even if you dispose of it, you're still liable for it.
So it'd be smart for me to make sure that when I do my lease, I include any sales taxes that I need to collect for that transient lease, to make sure that I collect it and then pass it on to the government.
Yes.
Okay. I guess one important aspect to mention is that this tax is calculated over the revenue, not the income. Is that correct?
The sales tax is if you're classified as a transient, then it's almost they're calling it sort of like a bed tax, because you're utilizing the space. So what the value is, whatever the value is, it's a tax on the gross.
It's a tax on the gross lease amount.
Yeah.
Okay. Any county taxes that we have to worry about here in Miami-Dade?
Well, this is where the Miami-Dade County, and also Los Angeles and in New York, more of the states that give certain preferences to individuals. Like, for instance, in Miami-Dade County, you have, like the rest of the state of Florida, you have homestead. So homestead allows the person that owns the property to not allow the county to raise more taxes than a certain amount. So normally the threshold is about 3% per year on the value. So they cap it, it's homesteaded, you are protected for bankruptcy purposes and so on. The county is looking at websites and seeing residential properties that are classified as residential to you. You're claiming an exemption, and they're saying, no, you're not, because you're renting it on Airbnb. You have a commercial use, so we're going to try to take you out so we can now raise your value to the market and consequently hit you with a much higher tax. So, in the short term, I think a lot of people are getting away with it as the county realizes how people are getting around the rules. they're going to be taxed more. The sad thing is you could potentially lose your ability to have homestead protection.
So apparently this all seems kind of complicated. So we really need to make sure that our viewers come to us and get the right advice into how to handle their properties that they invest in here in the United States, and especially when they consider receiving income from it. Thank you, Ray, for joining us today. I appreciate it, and we'll see you next time with our next topic.
Thank you for inviting me.